Welcome to Philly Fortune Talks with your host, Jake Penny, where the city's brightest minds share the secrets behind their success. Are you ready to be inspired?
Imagine securing fast and flexible financing for your next real estate investment. Today, we explore the expertise of Ian Walsh, managing partner at Hard Money Bankers PA. With over 11 years of experience in financial management and a passion for lending, Ian is dedicated to providing creative solutions for investors in Pennsylvania and New Jersey. Hard Money Bankers offers nationwide lending solutions, including loans for property flips, rehabs, construction projects, commercial deals, and more. With a team of professional attorneys, financial experts, and hard money lenders, they provide loan approvals in 24 hours or less and can fund up to 100% of the acquisition and construction costs. Join us as we uncover Ian Walsh's journey, his insights on hard money lending, and how he can help investors achieve their real estate goals. Let's get started on Philly Fortune Talks. Ian, it's a pleasure to have you.
Thanks for having me on. I appreciate the invite.
Yeah, absolutely. So your journey in real estate, in general is quite impressive. Can you share what initially motivated you to get started in real estate and in the lending?
Lending didn't come till later. So real estate I was in college when I first got interested in it, and I read the Rich Dad Poor Dad book, and I saw the excerpt about wholesaling, and where he made like 40 grand and like a swing of a pen. And I said, I need to do that, because at that time that was, a little bit less than I was making per year. So it kind of opened my boundaries to what's possible. And from there, I just started wholesaling, and we would wholesale a lot of properties in 2007, 2008, and then started a property management company, sold that. And then I ended up lending. So that was kind of the entry though into real estate.
Got it. Okay. So, how did, lending coming about? What inspired you there, and how did you get started in being a managing partner at Hard Money Bankers?
I think it was just like the natural evolution. I had done so many transactions from wholesaling. It was a really good place to start for people in general. I think when people ask, where should I start in the business? So I really learned the market that way. And then we rolled that into a property management company, which has its own experience in it. And once I sold that, it was just kind of, I had some silent partners in the property management company that were already lending in Maryland. And I said, let's, why don't we deploy capital in our space in Philadelphia? So that was pretty much it. It was just like a 1, 2, 3. It was a natural progression. I was selling the management company, and yeah, that was basically it.
Got it. So like Hard Money Bankers has been around for a while now, and you guys are like pretty much like a nationwide lender. I'm sure you guys already had like this grand vision, but for the listeners, what is the vision for the company?
Yeah, we're not trying to, bigger is not necessarily better in our minds. We
Mhm.
really tailored this business around each of our lives, in terms of making sure the business didn't run our lives, that we ran the business. And that's a hard thing to do when you're building
Right.
businesses. It took 3 of them to do that. So, we don't have the desire to go, we see this private lending model is not designed. It doesn't flourish under large national growth. It kind of implodes on itself, because you have to really be flexible, lean, and ability. You have to know your market very well. And if you don't, you try to make it into a cookie cutter atmosphere. I've just seen a lot of people that try that fail. So we run lean. We self fund a lot of our projects, and
Yeah.
the grand scale is really just to self fund everything, and that's it. So, but it's not to take over the world. That's not the style here.
Got it. I mean, that makes sense. There's a lot of companies out there that have rebranded, probably because they've, kind of shit the bed.
Yeah, and it's a lot of headaches, right? So you have, or at least the way we see it is, when you have a lot of overhead, a lot of people, a lot of management, you're not even really focused on the business anymore. You're just focused on management and headaches and things that we've all run businesses with a bunch of employees and a bunch of um, overhead, and kind of got that out of the way mentally. I guess,
Yeah.
like, I definitely had a bigger ego when I was younger. So I enjoyed running, overseeing a bunch of people and stuff. But in the end, it's like, I don't know. It's not really, less is more. Less can be
Yeah.
more in terms of the operation. Operationally, less is more, and if you can get more bang for your buck, so I have to do a whole lot less units, whereas like my competitor, quote unquote competitor, that might have a lot of overhead, they might
Mhm.
have to do 4 or 5 times the amount of transactions to make the same amount of money that we make. And so it lets us stay flexible, lean. That's important to us.
Yeah, I mean, I feel like, as entrepreneurs, majority of us build businesses that are designed around the lifestyle that we want. Um, so yeah, that's all awesome. You've helped many investors secure funding for their projects. What key strategies have been essential in achieving success in hard money lending for you and hard money bankers?
Just knowing the market, I think, is really important, and then being able to close on transactions very, very quickly, and without a lot of red tape. I think those are the key factors with us that keep us separate and easy to work with. Um, yeah, I would just say that, and then just really knowing the market, because you can't be on the wrong side of wrong with lending, because
Right.
I could be wrong that you're going to sell like I might say, hey, I don't think you're going to sell this house for 400 grand. You think you're going to get 400? Great, you get 400, but I base my numbers maybe on 350 or 300. Even though I'm wrong on your out sale number, I'm still right on my protection level. So understanding that threshold is really important. You can't. The business isn't really designed to work off like appraisals. You really have to know your market, and so that's been really important along the way for us.
Yeah, you're definitely saying that right now. So like appraisal values are much different than actually sale prices that are happening. Like of course appraised value are higher right now. But the actual sale price of it is coming in lower if you're doing like burrs and whatnot.
Yeah, I mean, you have a shifting market for the first time. Most people that have just gotten into the market in the last 5 or 6 years, it's very new to them. A lot of them got washed out in the last year and a half. A lot of the realtors and stuff, just because everything froze up. But that was inevitably going to happen, because we have 2007 or 2008 was the last time that people saw anything like this, and from there it's been a straight bull run. And because of that, the market has corrected a lot of mistakes along the way. And now we're in a time where things are changing, and therefore your sales prices shift. When you're in the suburbs, it's still pretty hot. When you're in the city, not as much. And I think ultimately we still haven't shifted to a seller's market by any stretch, but it's coming.
Right.
It has to.
Yeah, that's for sure. I don't have my
I'm sorry, a
crystal
buyer's
ball.
market. Yeah, a
Yeah,
buyer's market. Yeah.
I don't have my crystal ball, but we definitely been waiting for that, but who knows when that's going to happen, but it's definitely coming. Um, so speaking of like challenging times, can you share like a specific, scenarios per se, that was challenging alone and how you managed to make it work for the borrower or how it didn't work for the borrower?
In lending, sure. I mean, we've had it both ways. It has a lot to do with the borrower making the right decisions a lot of times.
Hmm.
So when you get into a sticky situation, the borrower really is the one that's going to dictate whether this is going to go the distance and you're going to go to sheriff sale with it, or you're going to have a clean exit. Um, so we usually offer. I've offered. We usually offer as many options as we can to not get it to go to sheriff sale, because everybody, it doesn't. We don't want to go to sheriff sale. You don't want to go to
Right.
sheriff sale. So it really comes down to the borrower making the right decisions. Honestly, it's not so much as me. As far as like situations we've been in, nothing too crazy. We simply like, let's say you go over in construction. You're either gonna have to do either liquidate now quickly, where it stands, or you're gonna have. Sometimes we'll say, hey, you can deed us the property over,
Hmm.
um, depending on where it is in the process. And sometimes we just say sell it, or sometimes, bring in extra cash or something. I've had scenarios where somebody ran over and I still felt comfortable on my numbers, so I would rewrite a loan or something to bring more money in for them. But um, honestly, lending doesn't have too much. Property management, that's a different story. I can go back to those. Like, I have some wild stories in there, but not you don't get too much craziness in lending.
Got it. So like when working with your team, what qualities do you prioritize to ensure like effective collaboration and like, successful loan processing?
Well, our portfolio manager, she handles the loan processing point, and she's exceptional at it. So there's no, I think a lot, again, less is more here, because if you were to go to like somebody that is one of our competitors, for instance, because they're being underwritten by a bank and not like an individual, you're
Mhm.
going to have an unbelievable amount of steps, hoops, and people to deal with to get it to the closing table. So with us, it was making hitting the right points, the most important points, and kind of cutting out all the fluff, and that keeps the borrower from getting frustrated. Whereas, like, I certainly know what it's like on the other end when you go to like the bank type underwriting, where it's just you're 45 days out and you're being underwritten by 3 or 4 different people that you don't talk to, you don't know. So we try to make that process as streamlined as possible by like making it as simple as possible. I mean, if I have to, I could close. I have somebody right now that wants to close tomorrow on a transaction, and the fact that that's even an option is unheard of in this business. So the only way we can do that though is you can't do that with a bunch of paperwork. You can only do that with
Right.
very a very streamlined process. Yeah.
So you've been saying like less is more a few
Mhm.
times now. So when like balancing life and business, for a lot of people that can be challenging, but it seems like you've built the business around your life. So like
Yeah.
what daily habits or routines, help you stay focused and effective and have that balance or integration with professional life and personal life?
I've just become very, I guess, minimalist. Like I'm minimalist in what is necessary. Like I don't. I'm going to do the minimum effective dose to get whatever I need to
Mm.
get to have the benchmark that I want to achieve. And some people might call it lazy. I don't really care. I've been around this business enough to understand it. Um, so if I'm doing if the phone is ringing and I know like my benchmarks of what I need to achieve, and I know my timelines that I'm on to work. So like in the morning or something, maybe I work from like 1 hour or something like that in the morning, and then I do whatever I want for a period of time. Maybe I come back and do calls, whatever it may be. But I don't. I spent the first 15 years of my working career allowing businesses to run me,
Mm.
and that was a huge difference here. And it sounds everybody's trying to achieve that. It's hard. No, it's hard to get to that point because you start building a business and you start bringing on employees, you start having overhead, you start not knowing which hats this person has to wear and that person has to wear. So you start wearing the hats, and then you're doing more things that you don't want to do, and you can't spend time on marketing, right? So it's not as easy as I'm making it sound. I think what happens though, I think the thing that I was able to really focus on is like what my focus was, and it was simply making money. Everything else that you're building a business for along the way, that anybody that's not just there to make money and hasn't cut it down to that efficiency, or they're going to be there. And I was there 3 times in my business, building businesses where I was there for something other than money. I mean, money was a high priority, but there were other things, whether it was like an ego, whether it was other I just should prove something to somebody, to myself, whatever it may be. If I wasn't clear that I didn't need to do all that this time in lending, then I would bring something in subconsciously into the picture that would then cloudy that and start having the business run my life. With lending though, I was very clear. I had already checked those boxes off in prior businesses. So I knew coming into lending that it was simply about this and my life was going to look like this. And it was just very, very clear to me. Um,
Yeah.
yeah.
They always say like flip, bank, live, to where it's like you flip properties, maybe not in your instincts, but no, you've
Yeah,
done
I
a ton of
flipped before.
wholesale deals and flips and stuff.
Mhm.
They always say like flip, bank, live. So it's like you do a lot of flips, you wholesale, whatever, you stack your cash, and then you become a lender, and then you start living life, a lot easier on the other side because at the end of the day, the bank's always in control.
Yeah, I mean, it's not. Yes, I enjoy it personally. So I think honestly, though, these businesses, whether you're gonna be a property manager, a realtor, a wholesaler, it has a lot to do with your personality.
Hmm.
So, you know, a flipper is never going to love to do what I do. If I'm making, small, healthy but small, I'm not making 50 or 100 grand on most of my transactions. Whereas like flippers, that's what they're out for. They want those big hits. They want the big checks. They want to take risk. That fits their personality. It doesn't fit mine. So they get bored with lending. Flippers would get
Yeah.
bored with lending. Property management, on the other hand, if your personality is suited to like very, very organized and high compartmentalizing, and you're okay with small, very, very small margins. That's if that fits your personality, that's a fine fit. So honestly, the flip bank lend, sure. I mean, I get it. I understand why that saying occurs, but ultimately, if your personality doesn't fit lending, it's not going to be for you. You're going to end up,
Mhm.
again, subconsciously bringing some sort of drama into your life that's going to not match. So your personality has to really match what lending is and truly what lending is, because also you have to know what you're doing.
Yeah.
We have some of the best attorneys in the business, and I've seen it go wrong. People think they retire at 60, they're going to do some lending out of their IRA. They see the wrong side of a transaction, and their $200,000 goes down to $100,000 in the blink of an
Oof.
eye. And you can't take too many of those losses, and you're always the lender, but they didn't evaluate the property right or whatever it may be. So those that's it's harder than it looks, but yeah, I guess if it fits your personality, it's a great fit.
How did you come up with like that, yeah, you were going to do you were going to do lending? Like, did you learn from mentors, books, podcasts? How did you approach that?
Mm, I had done 1,000 transactions before I ever got into lending, and I just knew I had two silent partners that were lending in Maryland, hard money bankers at the time, and I knew how they were running it, and I was like, I could do this, because I could look at a deal and know where it's going to go south, who the players were, how they were going to go south, like understanding I knew all how to do all this before I got into the business.
Mhm.
Because once I started talking, I was like, yeah, guys, I'm good. I can do this, but only because I had done 1,000 investment transactions before getting in the business or whatever it was, and just meeting the players, knowing how it all works, understanding tendencies. You kind of know. I kind of know when I get into a deal what kind of person I'm dealing with, how they're going to execute, how comfortable I'm going to be at a certain number. If they're going to go sideways, it's going to go here, so I got to make sure my number is tight here to make
Right.
sure I'm protected. So I kind of know all that up front. And then when I just said to the guys, yeah, I said I like this a lot more. I think I had just come off the crest of like mm, a bigger company that had quite a few employees, and I was kind of in that lifestyle. I said, I don't think it's for me anymore. And so I looked at this and said, oh, this is a lot calmer, a lot more of what I think I want in my life at this point. It's focused on money more than anything, and
Mhm.
it was just a good fit at the time.
You're pretty knowledgeable. You're at the top of your game. What upcoming trends or like opportunities do you see for private lending, hard money lending in the future? And what are you most excited about? How are you preparing for
I mean, I'm an underwriter, so I always think the world's gonna end. That's part of like being an underwriter. So I don't know if that's like it's weird because I'm an optimistic person on everything except for. But I honestly I think we're at a tipping point in the economy. So the truth is, for private lending, I think you're gonna see a lot of money flowing into the private lending space because institutional money is not interested, so private money is. There's going to be a lot of opportunities as finally when the market softens here, as it comes in and the prices actually soften. A lot of lenders are going to go out of business as well, and that'll be an opportunity for us to either buy books out or what have you, because we're as conservative as you could be there. So there'll be some opportunity around the corner, but it's really about I try not to predict. I just try to adapt. So it's about, okay, what's this current next 3 months holding? What are we seeing right now? Right now, for instance, in the marketplace, it's very hard to find a home for mixed use properties for whatever particular reason.
it?
Like banks don't really want to touch it. So everybody's coming to us for mixed use. And I have no problem with mixed use because you can easily just turn the other unit into a residential in most areas. And yeah, now you have a multifamily instead, but banks for some reason. So we see it, we're flexible with it, and we go, yeah, okay, there's an opportunity there. We can take some of them on the book, and then I'm sure in a couple years or 3 or 4 or 5 years, whatever, the banks will reopen their doors. Or thoughts on that, or people will just start converting those, uh, you know, commercial spaces into residential and make it a multifamily, which is fine. I underwrite it based on that capacity. So we could see those little things that pop into the market that you can kind of um, where there's a lot of refis going on, maybe the people are looking for cash out. We can also sense the market very well. So we get a really good sample size among me and my partners in terms of saying like, okay, hey, look, I got a lot of guys coming to us right now that are mid construction. Their term is up, and they have no way out. And we're getting calls from different lenders that are having this going on. And we're going, all right, something's happening in the market. We can feel it because we're all kind of sensing it. So the fact that we can feel it, sense it, adapt to it, start to push away from something, start to gravitate towards something, really, really helps. So I don't really have a crystal ball, but I can say that we can adapt pretty well.
When you say like the market starts softening and like crisis starts happening, big institutional starts to pull back, What does that look like for hard money lenders when it comes to, do rates go up? Do contingency factors go up? Do LTVs go down? What does that look like?
Mm, it depends how big of a crisis you're talking. Like you're not, if you so a true correction is 35%. A true crash is 75%. So at 35%, we're insulated. At 75%, nobody is. So I don't really know in terms of, we're as insulated as you get in this business. Um, so I don't really know like what a crisis scenario. I mean, even 2008, if you're built lean and you're not trying to go national, you're not trying to have this huge book of over leveraged properties that you don't know anything about, you're fine as a private lender that is a true private lender, where how much is on your book and all that kind of stuff. But as far as a true crisis, I don't know. I don't have any kind of. I'll let you know when we get there. I'll see if we can ride it out. Yeah.
For like a borrower that comes to you and, in a downturn, right? Like typically right now you're giving X amount of leverage, you're doing up to 100% financing on these properties, acquisition and rehab cost. But in like a correction or a downturn, you guys don't want to catch a falling knife. So are you pulling back on leverage for those individuals, on making them put more skin in the game? Um, what does that look
Cash
like?
is king. Yeah. So we kind of saw that happened when the interest rates went up, where we started to see more cash at the table to comfort us. Um, but I don't think at this point that much more cash, like if the market softens, that other somebody else's cash is going to make that much of a difference. It's really going to have to do with people finding the right deals
Right
when
deals,
it
yeah.
softens. Yeah, because even if you bring a ton of cash to the table, if you're in a bad deal, it's still a bad deal. But as the market softens, the comps change, and now a house that was 100 grand is at 60 grand. So that person's now going to have to pick that house up at 30 grand or 20 grand versus where they could bought it at 60 grand. So as the new properties come up in a softening market, it's really going to be about them buying at the right price and being truly tight on the comps. But I don't think additional cash will be that much of an offset on most deals. I think we're already there. I think we're already at
Mhm.
the cash place.
Yeah.
Yeah. So
So how do you, like at Hard Money Bankers, you're a managing partner, you said you're an underwriter. How do you approach like financial planning for hard money bankers to ensure like stability and growth and whatnot?
I mean, we have more capital than we know what to do with. We have way more capital than I don't say that. I mean,
That's a good problem and a bad problem, right?
yeah. I mean, we don't. We could if we needed more money, it would be there. But we don't deploy money based on any kind of pressure to deploy money. We just, if the deal is there, we take it. If it's not, we don't. So there's no financial pressures, which keeps everything very good. When you have financial pressure to put deals on the street, it jeopardizes the integrity of the deal.
Yeah.
So we don't have that. So there's no real like financial plans or anything other than to stay in that lane of making sure that there's no pressure to deploy capital. Um, it's steady, which is what's important. Influxes of pressure to deploy capital would be not a good thing.
Yeah, definitely. You don't want to just make a deal work to make a deal work because you
Mm,
want to put money on the street.
yeah, no, definitely don't want to do that. We don't want to do that. Yeah.
So your work at Hard Money Bankers, provides creative lending solutions for a lot of real estate investors. Can you share an example of like an innovative approach you use to help a client secure financing? Because I know like, you guys have said, or at least I see, if it comes down to the nitty gritty, you can close deals in like a day or two, I've
Mm,
saw. So
yeah.
how does that work compared to like, other lenders out there? Because that's a huge competitive advantage.
Yeah. It doesn't really happen that often where you need to close that quick, but it's happened. I mean, we've closed in 18 hours before, right? So I look at
That's
you
awesome.
simply, yeah, you look at the deal and you just go, hey, I'll look at it and go, yep, my numbers, I like the numbers. Get me this, and this by 5 p.m. today, and I'll close it tomorrow. And they do it,
Wow.
bang, it's done. Just so that is, I guess it's a competitive, it's a good advertising piece, but it's very rare that somebody needs to close in 24 hours. So yeah, I don't know if that answers your question, but as far as like creative financing, it doesn't get too overly creative. I think most real estate where people are chasing like this fancy technique to close. It's really just to sell at like a boot camp or something. I mean, ultimately it boils down to
Right.
the price. So, uh, yeah, so that there's not too much in that space of like needing to be that creative. Sometimes we'll cross collateralize properties. If somebody owns other properties, we'll bring them in. Every now and then, if I look at a second position on something to make me comfortable, I'll do that, but it's pretty rare. Um, we know our way around a transaction. So sometimes, like I have a guy now that's dealing with a self-storage unit and he's asking about an IRS lien. So a lot of people come to us because we can just like, we know our way around a lot of different kinds of deals when there's hair on it, that we can really know whether it's real hair or it's like, hey, we can deal with this, no problem, or here's how we're going to go through it. So it doesn't, but that doesn't happen too often. The complexity of deals doesn't happen too often. If you're that deep in a deal, you got to be careful that you're even in the deal. Most deals should just be
Mm-mm.
straightforward, title, insurance, ready to close. Like it should be straightforward.
Yeah.
But we can get creative if we really need to.
I had one of those 18-hour experiences when I on my first deal back in 2016. Thank goodness to my grandmother who pulled through for me, or I would have lost like 15 grand hard. Um,
Yeah, you
but
had like a deposit on it.
I didn't know much about much. I just got started. I was dropping out of college, and my like I had an accountant because I was doing landscaping and whatnot, and he was doing hard money loans on the side, and he was a
Mhm.
real shady character. And he said he would fund the deal like a day before. He like makes up this bullshit story because I don't even think it's real. He said he had these deals, this oil and gas deal in the Bahamas, and he needed the funding for that. And I'm like,
Uh,
that just doesn't even sound, right.
yeah, try a little
You're
harder on that, right? Yeah.
yeah, you're
Yeah.
a random accountant out of Delaware County. Like you don't seem that sophisticated.
Right.
And I called my grandmother, and that was my first play at, private money, and I've been using it ever since. So I
Yeah.
freaking, but yeah,
Yeah.
that was my 18-hour down to the hour story.
Yeah, grandma Bill, yeah, I mean, that's not, I mean, people do that, that happens for sure. You make a phone call, and somebody's there, but it's hard that's always like a lifeline, more or
Oh
less.
yeah,
Yeah,
that's a lifeline for sure.
yeah,
You got to have tons of trust, and in that person has to have a ton of trust, integrity, and confidence in you, and just honestly
for sure.
love your guts.
Right, yeah, for sure. For sure.
So what's your thoughts on multiple income streams? I know you just said like you love lending, right? But
Mhm.
you do anything outside of lending where there's multiple income streams involved?
I mean, some stuff, yeah, I mean, yeah, I mean, I've also been trading for 20 years, so that's not that,
Oh,
but
nice.
yeah, so, but that's, you know, again, that has to fit me, and I don't want to fit it. So, but as far as like multiple income streams, yeah, I mean, it just depends on whether those multiple income streams are creating a headache or they're an actual like, what do you want out of the income stream? Do you
Mm,
want a bunch of money a month at any cost? Do you want enough to support your lifestyle, whatever you're looking for. But I don't think it's ever bad to have multiple income streams. Lending, if you know how to do it right, has multiple income streams built into
right.
it. So there's multiple ways that there's income there. But it is all tied to real estate. So that's the only thing that's a little, there's some risk there. But it's not like we get opportunities all the time to go and invest in other businesses and stuff. Um, maybe I'm just lazy. I just don't want to. I'm just like, it seems like a headache to build that and stuff like that. I honestly focus like my next venture in my mind is to do things that don't involve money that are better for humanity. That taking the skills I've gained to do that to grow something like that, I'd rather do that. So yeah, I don't. I think multiple streams of income is a good idea. Um, but for me, as long as it doesn't include headaches.
Yeah, I mean, hey, at the end of the day, it has to fit your life, it has to make you happy, has to have a purpose, a mission, um, and just not cause stress, right?
Yeah, less stress is always better.
Oh
It's
yeah.
hard. It's hard because you got to get, a lot of people, you get to make that leap into the world of like running your own business, but then really the business running with, limited or no input from you. It's hard to get to that point. I spent many years trying to get to that space before I got to it. So I don't, and everybody goes through the same growing pains, starting as yourself, and then the next person, you take on some staff, and that gets expensive with payroll. So it's how much, but once you get out of there and you steady an income, it's like, I don't want to discount the fact that you want to build the business around your life, but you certainly want the income.
Mhm.
Like, you don't want to sit there be making nothing per year and saying, oh, I don't have to do anything. It works around my life, but you're scraping to drive down to, wherever. So you need to establish a way to have an income that fits, an income and an investment line that fits first, kind of like a base. And then just at that point, figure out what your life should look like. Don't continue, if I were to give advice on that, don't continue to chase just growing the business, certainly not just revenue. Because you always want to be focused on the bottom line, not just your revenue. Because if you just grow revenue and your bottom line doesn't change, you're literally just growing headaches for
Right.
yourself. So yeah, I guess that'd be my take on it. Revenues, additional lines of income streams, but really understand what each income stream adds or subtracts from your life.
Yeah. Yeah. It's like, if it doesn't, what do they, if it doesn't work, take it behind, Mr. Wonderful says, if it doesn't work, if it's not making money, take it behind the shed and shoot it.
Sure, yeah, oh, definitely don't do something like, because then it's just a hobby. So whatever
Right.
you're doing, I hope it's not a hobby giving you a headache. If you really love it, sure, do it, great, like that's fine. But then it's just a hobby.
Yeah, but the money definitely has to outweigh, the headache and whatnot. So it's like trading less time for more dollars at the end of the day. That's what's, that's what's better for you.
Yeah, yeah. I mean, the ideal situation, if you come to the conclusion of like why you're in the business that you're in, if all the other things that you needed to be fulfilled have been fulfilled, whether it's like the ego or whatever it may be, once that's done, um, ultimately you're gonna arrive at like, okay, I want money just because I don't want to think about, having it or whatever. You don't need to think about it anymore. And once that occurs, you're like, okay, how do I do this in the least amount of time possible to sustain this amount of income? So then the whole game becomes like what's your hourly rate, right? Like
Hmm.
what's that number? And if you do it right, you can have an extremely high hourly rate because you're working barely at all and your income is staying where it is. So if you're working 100 hours a week right now, but you get that down to one or two, which is super. I mean, so many businesses could do that. They don't realize it. Um, but you get that down to like 1 or 2 hours a day, maybe. If you're making 100 grand, now your hourly rate just went from whatever that is down to 100 times, 50-fold. Um, Most people then think they're going to go out and do something else super productive and lucrative, but the reality is you're not. So um, most people aren't for the most part. So, but yeah, yeah, yeah. The most time, most amount of money for the least amount of time, for sure.
Yeah. It's that 80-20 rule.
Yeah, yeah, I would make it 99.99, one rule if I could. Like, so yeah. The only thing I'd say I'm not 100% passive in what I do, but we've definitely efficiently put it into play. We all the partners run a very efficient day, and it's not super packed with intense work. It's not how we do it.
You got the 4-hour work week down.
Yeah, yeah, I guess Tim Ferriss like made that famous. Sure. Yeah, but I didn't systematically go about it. I just refused. I think that was it. I refused certain things that
Hmm.
I was like, no, I'm not doing that. Like, I'm not doing that. So once I realized the things I wouldn't do in building a business, and I was like, well, if I don't do that and I can still do it like this and it still works, then good, I'm doing it. But when you put your foot down as to what you will not do running your business, I think that changes things. Because then you
Absolutely.
still figure out a way to do it. You still figure out a way to do it without doing the thing that was going to take an extra 10 or 20 hours
Yep.
of your time.
Yeah, you start working on the business instead of in the business and delegating as much as possible to where, hey, if your time's worth this, then why are you doing all the stuff down here that costs this, that you could just sub out. Um,
Sure.
but if you had one piece of advice for, an aspiring real estate investor, entrepreneur, a future private money lender, looking to make a significant impact and get started, what would it be?
In real estate specifically,
Yeah, specifically real estate, or I mean, honestly, just in entrepreneurship in general.
um, I would say the thing that got me as far like is have unrelenting passion and unrelenting discipline, self-discipline. If you have those two things, it doesn't really matter what's in front of you, you'll find a way. So but you have to have self-discipline, you have to have passion for what you're trying to achieve, and be clear. And I'd say, and the final thing with that would be, and be clear on both of what those truly mean to you. That's what I would say to somebody.
Awesome. Well, Ian, I appreciate you being on Philly Fortune Talks. For listeners that want to connect with you and learn more about Hard Money Bankers, what's the best place for them to go to?
hardmoneybankers.com works, or you can email me at ian@hardmoneybankers.com. Either way is fine.
Awesome, man. It was a pleasure having you.
Thank you very much.
Thanks for tuning in to Philly Fortune Talks with Jake Penny. Inspired to share your success story? Visit phillyfortunetalks.com/guest and let's inspire together.